Hey there, ShareTreck friends. My name is Sandeep, and we're back with another fundamental analysis. This week, we're going to talk about Oracle, a stock that fell over 11% after earnings, and we're going to tell you why. So let's get started. Welcome back, friendos. So Oracle had a nice beat on EPS, a slight miss on revenue, but the big story is that their cloud guidance came in slightly weak and brought a lot of pessimism in the stock. And the stock fell almost 11%. The company has performed very well, however. And since the pandemic, when it used to be a $37 stock, and today it's over $100 stock, if you were to own it, you've been probably pretty happy. So why the big drop? A lot of the time that is because of insider pessimism, and I went ahead and took a look at a bunch of their SEC filings to see if there's a lot of insider selling. And I did find out that the vice chairperson sold 40K shares, so maybe he or she is trying to buy a Warhammer or something. And another director sold 16,300 shares. However, that was a transfer into a spousal trust, so very little change over there. Why? Maybe it's because of stock dilution. I went ahead and checked that in the SEC filings as well and found that on December 22nd, which is after the earnings, by the way, the company Oracle filed for a stock offering up to 350 million shares, which is part of what they claim is the 2020 equity incentive plan. So as investors, that's something we have to consider and watch out for, that there are shares that can be offered and there is dilution that could occur. So something to keep in mind. So let's go over to their financial statements. Let's see how their earnings are doing. From their earnings, and I have reviewed the earnings, I've listened to the earnings call, so I did you the work, and this is my analysis. From their earnings call, Oracle cheered the words cloud growth. That was their big selling point. And the reason why is that cloud growth and cloud services and licensing support makes up 74% of their revenue. And this sum, by the way, this amount is growing by $1 billion each and every quarter. So that's why this company touts this, because this is what they do. What their additional 26%, they consider other services. And another great thing is that this company says that these other services are expected to grow and accelerate year over year. Cloud growing and additional services also growing. So as a fundamental analysis, I like hearing that. So what is really appealing about this stock, which I discovered from their earnings, is that Oracle's cloud and cloud service licensing support, which makes up a large portion of their revenue, has an insane gross margin of 78%. And that sum comes from a mix of different revenue sources. The main being support and cloud support, which is software as a service. And software as a service, according to the earnings call with the CEO and other directors, software as a service remains constant. And there's not much growth in that, but it remains constant and growing very safely. However, the other part, IaaS, infrastructure as a service, is growing a lot. And that is pretty good. They also mentioned that Gen 2 Cloud made up 65% of their annual revenue, which is about $6 billion. I was a little disappointed to see that software revenues were down 19% year over year, but how does Oracle compare to its competitors? Because everything is relative to something else. I went ahead and took a look at one of its largest competitors, which is Google. And what I discovered during the same period, during the same quarter, Google's services revenue was up 11% and Google saw a 22% cloud growth during the same quarter. Maybe this is because of a lot more integration and migration to Google Workspace, but let's find out further. The company also claims that they are getting a lot of interest and a lot of revenue from what they claim are sovereign nation states, and that is very vague. I did a Google search and that can mean anything. So it's up to interpretation what sovereign nation states are. And they are buying Oracle, and they're buying Oracle cloud data centers. In addition to these sovereign nation states, large banks, telecom, and industrial are also making up a significant portion of cloud revenue, Oracle cloud revenue. Company went ahead and mentioned the countries by name: Japan, Italy, Saudi Arabia, Bangladesh, New Zealand, as some of the countries that are recently picking up and recently buying more of their services. In addition to their already large cohort of customers, they have added much more from companies like Nomura, Vodafone, Telecom Italia, Saudi Telecom, and a large Korean conglomerate, which they did not name. So international revenue. And a lot of these are very big, growing countries. So if you like international exposure and you think that there's a big market for this, Oracle also thinks so. And Oracle has already taken advantage of that. So it claims that what Oracle says it does is it makes infrastructure fast and at a lower cost, which to me shows efficiency. Fast, lower cost. I like hearing that. And so do a lot of his customers, apparently. But the big buzzword for 2023, and I think for 2024, is AI. And how is AI doing? And I wasn't alone in asking this. There was an analyst that also asked about AI. An analyst asked if Oracle's growth is coming because they're getting more AI GPUs. Are they able to get more of these GPUs? And this points out something called generative AI. And what I found out from the earnings call is that Oracle is increasing demand, and they're seeing a massive increase in demand and exceeding revenue from this generative AI and enterprise AI. In fact, right now, they have 66 cloud data centers. And the company says they are expanding 100 new cloud data centers. They are building 100 cloud data centers because they see billions of dollars of contracted demand and want to supply that demand. But so if we want to take a look at where the shortages, where the supply chain disruptions are, it seems like it's in this chip and this AI field. And a lot of the shortages seems to be in databases and generative AI and chips, and of course GPUs to make data centers. So pointing out that cloud demand is increasing is pretty nice for anybody who is already invested in some of the chip stocks and some of the server stocks. So that's pretty nice for the already rocketing chip and semiconductor industry. And I went ahead and took a look at their website because I want to see how much these things usually cost. And what I discovered is the company touts that they are a much cheaper alternative to some of the very large already cloud revenue companies like Microsoft, Google, and Amazon. Namely those, Oracle claims they're cheaper and better at it than them. So what was kind of alarming to me is for me to get to Oracle's AI section, it was very hard to navigate on the website. I had to actually Google Oracle AI to find that. So that's something that can be a little annoying. Now, software margin is something that Oracle claims to expect a growth rate of about 50% over the next few years. And that's nice for the AI industry, anybody invested in it. Oracle likes to tout that they are one of the big players in earnings. The earnings call alone does not seem to point to why this company should fall 11%. And why? So why is it falling? I went ahead and took a look at their earnings press release, which I will show you right here. So looking at this press release here, first of all, Oracle says that the AI demand in AI is growing astronomically in their words, but they need much more chips, and they need chips to build these additional 100 data centers. They have 65, they want an additional 100 more. And if we look at this nice little PDF that Oracle has available for me, the real number that I believe hurt Oracle is this drop in right over here. This drop in cloud license on-premise, cloud license and on-premise license revenue. As you see over here in 2022, we had a huge number of 1.4 billion, and now it dropped to 1.1 billion, which is a significant, what is that, about a 3 to 4% drop, which is a lot, especially in one of their core businesses. Oracle applications data, if we were to take a look at some of their expenses, Oracle applications data based and more, to me, makes a good point. Over here, Oracle applications data makes a really good point where in their earnings call, they like to say, why as a business owner would I want to make my own server? Would I want to create my own server when I can go to Oracle, which right now they can make the server much more cheaply, much efficiently, and I get access to all of their AI tools. So as if I was a business owner, I would probably check out or consider Oracle rather than make it my own, like they say. And another thing, after looking at some of the expenses, making servers is a very capital intensive job. To buy some of these chips, to buy some of these GPUs, I mean, these expenses are going up. But one thing that is quite interesting is, although they did have a significant increase in revenue, their sales and marketing actually saw about a 2% decrease. To me, that's showing efficiency, and I like that. Showing a much more efficient company. It's showing that the company is becoming much more established because they don't need to advertise as much to get an increase in customers. Looking at their margins, however, all margins, this company bundles them together. It's still a very highly profitable company, and it gets about a 28% margin from all their services. And this is why I believe Oracle wants some of those chips, wants some of those GPUs. It's because they can use those chips and GPUs to generate revenue and turn into gold, generate a huge profit. However, we still have growth despite their decrease in some of these expenses, and that's really nice. So the big selling point for Oracle to me seems like, why would you want to make your own server when you have access to the experts? You can do your core competency and outsource the servering to a company that has AI, has the best chips, and has among the best cloud. And looking at their balance sheet, there's very little balance sheet risk. The company makes $7 billion in 6 months, which is about $3.5 billion in cash flow. Looking at their CapEx, which is dropping year over year, despite the expansion, it's about $1 billion in CapEx, meaning you're still massively revenue cash positive. They do pay a 40-cent dividend as well, which is something for all those dividend investors. If you like that, that's another little mint at the end of your meal, a little addition, which might not mean as much, but it's nice to have. One thing I'm really noticing though about these cloud companies, and this is why I believe Oracle has been punished so greatly, and fell 11% is these cloud providers really, and these server providers really seem to get punished heavily, maybe overpunished in some ways, on cloud revenue and cloud growth, server growth misses. And they get rewarded heavily when they do beat. And this is just what the market is today. It's not necessarily right. It's not necessarily wrong. It just is what it is. So Oracle, with that lack of growth up to Wall Street's expectations, fell 11% in a day. And on a $282 billion market cap company, that takes out about $31 billion just like that on a slight cloud miss. So if you can push cloud to beat expectations, your stock rockets. If you miss, your stock plummets. And this is just the market is. So is Oracle a buy right now? I've read through some of the reviews, and it doesn't seem like Oracle has a very nice reputation from the folks who use it. And a lot of the users do say it's a very bad, very not so great company to have. However, if we were to take a look, I made an update to our Excel sheet, our PEG and PE ratio sheet. Now, I went ahead and updated our wonderful Excel sheet that covers a lot of the companies that we have brought up on this program and added Oracle in there. Oracle right now trades for about $105 per share, and based off Wall Street and other estimates, expects to get an EPS at the end of 2024, which is quite a ways away, of 5.57%, which makes a forward PE of about 18.85, which isn't bad. Actually, that's quite nice. According to the old Wall Street growth estimate of 14%, it will give it a PEG ratio of 1.33. However, based off what I have found from their cloud revenue and some of the other revenue expectations from this earnings, I believe their growth is expected to be closer to 17% actually. Instead, makes their PEG ratio about a 1.1, which is trading actually quite cheaply on the price to earnings growth, which is quite nice. And I like those numbers. So in conclusion, Oracle, it looks really nice from the accounting, investing, and fundamental point of view as a fundamental investor. However, from the user perspective, I don't fully understand because I'm not a Oracle user. And the reviews I read aren't too nice about Oracle. However, as an investor, I really like what I'm seeing. And in conclusion, the final decision is up to you. Maybe we have some people who use Oracle, and if you do, please share your experience with it. However, the company is making money, very low balance sheet risk, and a lot of growth expected in the future. And in the end, everyone makes his or her own fundamental decisions, but the company looks nice, and it's got AI, it touts revenue growth, increasing servers. In fact, a lot of this makes me a lot more bullish on some of the chips and some of the other sectors which are already seeing significant growth. But thank you kindly, friendos, for your time. Let me know what you think in the comments down below. Leave a like, leave a thumbs up, subscribe to ShareTreck, and thank you for giving me this opportunity. Bye for now. Stay based, stay well, and we'll catch you again.